What's up, guys? Hey, it's Clint Coons here, and in this video, we're going to talk about short-term rental arbitrage, but I'm going to show you a spin on it where you can do it and you can earn tax-free money. You heard me right. Just you have to know how to set it up, and we're going to show you that right now. Okay, so short-term rental arbitrage. What is it that people have been talking about? Because I got a lot of clients that have started tapping into this strategy because it doesn't take a lot of money out of pocket and it can produce great returns for you. So if you're not familiar with it, I'm first going to show you how it works, and then I'm going to show you the strategy that you can use to ensure that the money you bring in from it is completely tax-free. You're going to want to hear this. All right, so what is it? So short-term rental arbitrage is basically you find a property in a desirable location that you know is perfect for short-term rentals, right? So you got this property here, and it's owned by this individual right there. And so what you're going to do is you're going to come in over here, and you're going to enter into a lease agreement with this party. So you're going to lease this desirable location property from individual number one. Now, once you've got that property secured under lease, you're going to go out there now and start renting it out, VRBO, Airbnb, on a short-term rental basis. So then you're going to start renting it to these people who are going to come in and, stay at the property. Maybe it's 7 days or less because you want to materially participate and get some of the tax benefits on other deals that you have. Who knows? But the thing is, you're going to be renting this property out. So let's say I bring in this month $10,000 from my 4 short-term rentals. But this lease agreement over here with party number one requires that I pay him $3,000 a month. So here's the arbitrage, right? You made $10,000. That's what you brought in from the 4 individual short-term rentals. You paid out 3, so that leaves you a net profit of $7,000. Now, when you do this in your own name, it's taxable to you. This is ordinary income to you for using this type of strategy. Now, the key here, and this is what I'm going to share with you now, is how do I make this $7,000 tax-free to me? And just think, $7,000, if you made $7,000 a month and you did it for 12 months, that is going to be $84,000. So the strategy is, how do I get $84,000 tax-free on an annual basis? Well, the key is ensuring that when you do this strategy, you're not doing it in your own name. That's the problem people make time and time again. They're not using an entity that is going to make this strategy tax-free to them. Now, what is the preferred strategy from my point of view? What I think you should do is this. Go out and set yourself up a Roth IRA. All right, now I know some of you advanced investors now are probably kind of wondering, figuring out where I'm going with this. So you set yourself up a Roth IRA right here. Get this Roth IRA set up, and then you need to set up a limited liability company. So we're going to set up an LLC that's owned 100% by your Roth. Okay, cool. So I got a Roth self-directed IRA. So this is a self-directed IRA, SDIRA. I set that up. I got my self-directed IRA. Now, by the way, you can do this with a solo 401k if you've set one of those up. But this is simple for people who are just getting started to start generating tax-free money. I set up my Roth IRA, and maybe I have an existing Roth, and I roll that into the self-directed IRA. So I put in there $12,000 from a rollover. And you don't even have to have a rollover to do this. You go out and throw $6,000 in it tomorrow if you haven't contributed to an IRA. But you got to get some capital into that self-directed IRA. Now, once that money's in there, I'm going to take that money right there and I'm going to move it into this LLC's bank account. So you got to get a bank account set up for the LLC that's owned by the IRA. And of course, when this is set up, you're up here as the LLC's manager. Okay, you're with me thus far? Self-directed IRA, limited liability company, wholly owned, disregarded LLC, back to the IRA. Now, what's so cool about this is you take that LLC and you go over here to this guy that owns this property that you want to do the short-term rental on. You enter into a long-term lease agreement between your LLC and the individual for $3,000 a month. Okay, so now your LLC is the one that has contracted to lease the property. Once that's done, then your LLC starts renting it out on a short-term rental basis. And so using my original example, We brought in $12,000, right? I think I said 12, and we paid out $3,000. I think I said $7,000 originally, right? You made $10,000. That's what you brought in from the 4 individual short-term rentals. You paid out 3, so that leaves you a net profit of $7,000. That's wrong. It's $9,000 if those are the numbers I was using. It would be $9,000. I forget. So again, before you slam me in the comments, Clint can't do math. Hey, I've got blonde hair, so give me a break. You're making $9,000 here in this example. I brought in 12, paid out 3, I made $9K, right? So if you do that, $9,000 a month is going to come into that entity tax-free on an annual basis, or on a monthly basis. Why is it tax-free? Because this entity is owned by the Roth IRA. So Roths don't pay tax. And when you pull that money out in the future, it is tax-free to you by using this type of structure. So inevitably, if we made $9,000 a month for an entire year, what is that? $108,000, if my math is right. $108K a year that's going to go into a Roth that's completely tax-free to you. Now, if you want to do another deal, let's say you find another person. Here's guy number 2 over here who has a house and you want to do it. You can run it through there, or maybe you set up a second LLC, all owned by that Roth IRA. Just imagine the possibilities that you have with this strategy right here on how much money you could start accumulating inside of a retirement plan that is going to be tax-free to you when you decide to pull it out in the future. And it doesn't take a lot to get going here. All you got to do is get enough to enter into this lease agreement right there, and then you're off to the races. So next time you're thinking about using short-term rental arbitrage, think about what I just shared with you. Make that income completely tax-free. Take care, everyone.